One man, one phone, one bet. And in less than 24 hours, he broke an entire country's currency, humiliated a sitting government, and walked away with $1 billion in profit.
Yes, it's finally happened! We did it!
The British government spent £27 billion trying to stop him. They failed before lunch. His name was George Soros, and the wildest part? He wasn't a criminal. He never went to jail. He never even apologized. This is the story of Black Wednesday, the day a hedge fund manager went to war with Britain and won. Budapest, 1930. George Soros enters the world in a city that has no idea what's coming. His father, Tivadar, is a lawyer with a gift for survival and a habit of thinking 3 moves ahead. When the Nazis arrive in 1944, Tivadar doesn't panic. He forges documents, creates false identities, and moves his family through the cracks of a collapsing world. George is 14 years old, watching his father turn chaos into opportunity. After the war, Soros escapes communist Hungary, lands in London.
As we delve into the core
School
principles
of
here at the London
and
School of
studies under
Economics,
Karl Popper.
remember that understanding market fluctuations is key.
Soros calls it reflexivity, the idea that perception shapes reality, and reality reshapes perception in an endless loop. He takes this idea to Wall Street. He builds a fund. He calls it quantum. But his biggest trade hasn't happened yet. The European Exchange Rate Mechanism, the ERM. Britain joined in 1990. Late, reluctant, a little embarrassed about it. The pound was fixed at 2.95 German marks. Here's the problem nobody wanted to say out loud. To keep the pound strong, Britain had to keep interest rates high. But high interest rates were strangling businesses, crushing homeowners, killing growth. Prime Minister John Major had staked his political reputation on Britain's place in the mechanism. George Soros noticed the cracks. The pound is a dead man walking. Bet the farm. He borrowed billions of pounds from banks, immediately converted them into German marks and French francs, and waited. By early September 1992, Quantum Fund had built a short position of $10 billion against the pound. September 16th, 1992. London wakes up to a currency under siege. The Bank of England starts buying.
Throw more!
Hundreds
Faster!
of millions
Faster!
of pounds purchased
still
before
sinking.
breakfast, trying to prop up the price through sheer firepower. They announce an interest rate hike from 10% to 12%. The market shrugs. Britain raises rates again to 15% in one day, the highest emergency rate hike in British history. In the dealing rooms of Quantum Fund, traders are watching their positions explode into profit in real time. By early evening, Britain had spent an estimated £27 billion in reserves trying to hold the line. It held nothing. At 7:30 p.m., the Chancellor of the Exchequer, Norman Lamont, walked out in front of cameras. Britain was suspending its membership of the European Exchange Rate Mechanism. Behind him, someone on his staff was visibly crying. George Soros woke up $1 billion richer. The British press went looking for someone to blame. They found Soros almost immediately. He pointed out with maddening precision that he had broken no laws. Homeowners who had taken out mortgages were suddenly exposed. The political damage to John Major's government was terminal. Britain leaving the ERM turned out to be the medicine. The economy began to breathe. Soros had forced the surgery nobody had the courage to schedule. There's a version of this story where Soros is the villain. History doesn't remember the pound's defenders. It remembers the man who saw the crack before the building fell and walked away smiling.